first week. Indy Colts center Ryan Kelly will have surgery at his injured foot. He is out indefinitely. He injured it in a joint practice of the Lions last week and did not play in last week's preseason opener. Boston Celtics set to retire Paul Pierce as number 34 February 11th in the game against Cleveland. The longtime Celtics forward will be the 22nd player so honored, the first since 2003. And Seattle Seahawks defensive end Michael Bennett once again sat during the national anthem for the second straight game of the preseason last night. At the Ticket Update Desk, I'm Jeff Lesson. For more, 9701theticket.com.
The following is a paid program. Views expressed on this program are not necessarily those of CBS Radio, its sponsors, or affiliates.
Oh, yeah. Good morning. Welcome to the Hardcore Mortgage Real Estate Business Show brought to you by Capital Mortgage Funding. I'm your host, Harvey Freed. I got my whole panel this morning. Alex Nefouse across the hall here.
Hey, buddy. What's up, man?
Hey, Alex. Harry Glanz to my right.
Hey, that'll wake you up in the morning. I like that.
For sure. We brought in some special people. Derek Brooks from our office. Hey, Derek, what's going on, man?
Good morning.
I got to get that microphone
You
up
got to talk
there.
into that mic, bro.
We're going to get you all fired up there.
There you go. You can move it.
Don't be nervous, buddy. It's
Yeah.
okay. No one's listening.
Nobody listens to this show anyways. What are you
Didn't get
doing?
the memo on the Capital Mortgage shirt, but
Yeah,
we'll definitely include
he
him.
only works there.
He brings in his buddy and great real estate agent, Kyle Desmond from Hall Hunter in Birmingham. Hey, Kyle, thanks for joining us.
Thanks, guys. Thanks for having me.
All right.
Happy to be here.
August 19, 2017. I don't even know where the summer went, but it's been a lot of fun. There's been some great weather. I know
DreamCruise, Harvey.
DreamCruise weekend. It's
Full in effect.
And it's going to stay
in
dry
effect.
out there, Harry. It's definitely going to stay dry. Now, we talked, Harry, about this DreamCruise stuff.
Right.
You used to be into the old classics, but then you mentioned to me last week at your office that you like something like a...
At our office?
Yeah, at our office.
Yeah.
We were talking about maybe not really a classic car that you like.
No, I like classic cars. My period is really from 68 to 73, okay, before they put all the emissions controls on it. I like the muscle cars, specifically GM. I do like Mopar cars.
Cool.
But all of them. But you could recognize a car when you saw it from, a mile away. You saw the grill. You knew it was a 68 Pontiac Tempest or a GTO or a Grand Prix or a Monte Carlo. You just
Le Mans.
Le Mans, yeah, Chevelle. Chevelle SS, Camaro, Firebird. You just knew it when you saw it. Now I think you look at cars and I just don't think they have an identity, but that's my story and I'm sticking to it.
All right. Well, that's enough of the DreamCruise stuff. You guys get out there and enjoy yourself. Be safe as always out there on the waterways and the links. And again, we are going to have a wonderful weekend
Corvettes.
here. And we also have some cool stuff. We got the Tiger game coming up at 4 o'clock. I'd love to see them beat the Dodgers this afternoon and then the Lions preseason right after that.
Yeah, I want that too.
Well, besides all the sports stuff that's going on in town, of course, we're going to talk mortgages and real estate because that's really cool stuff that's going on in town. Kyle, it's been gangbusters. I know you're, recently in the last couple years, really getting a real taste of what's going on out there with buyers and sellers. And again, your generation, you're right in that mix. You're right in your mid-30s where a lot of the families that you talk with, they're out there buying homes and even their second home now.
Yeah, I mean, that's, the buyers right now for me have been, you get a lot of the young guys, 25, and I appreciate you telling me I'm in my mid-30s. I'm a little higher, little higher than that,
Right.
36. But, no,
Hold on. I realize you're a realtor. That's
34 to
exactly
36
mid-30s.
is
34 to
mid-30s.
36.
Oh,
I'm just
35
saying.
is, yeah, well,
See,
I don't feel-
37 to 39
They're
be
tougher
late.
than I am.
Yeah, I know, man.
That's earlier.
It doesn't feel that I'm in my low 30s. But
right.
anyways, there's a lot going on out there, and people, buying their first homes, buying their second homes. I did interesting the other day. I was doing something for a client and looking in that price range of $200,000 to $400,000. RoyalOak, Michigan, in the last 30 days, 90 sales.
Wow.
That's more. That's combined. If you combine Beverly Hills, Berkeley, and Birmingham, it's almost 40% more total in RoyalOak. So,
Yeah, just everything's off the hook there.
Yeah.
It's nonstop over the summer. What else are you seeing? Any interesting trends as we get closer to the end of the year? Are you working with some buyers, or is it just now with the inventory that's out there, you're sort of more specific on what the buyer's needs are, and when that house pops up, then you guys sort of jump on it?
Yeah, I mean, I actually have clients right now who we've been just kind of waiting to see what comes up for them. And, a lot of times, I think you can't be as picky as you used to be. And I think that some of my buyers right now are learning that. So, they're willing to give, one way or another so they can find something that fits them. Not exactly what they want, but as close as they can get.
Yeah, but Cal, don't you think, I'm just asking this question, and you're out there in the market, you're there every day, and you're working with buyers. Don't you think, what's your opinion on people waiting? Do you think they should wait to find that perfect house, or there's no such thing as a perfect house, or if you get close? Talk about that a little bit, because My opinion is this, is that you're going to live in that house a long time. If there are cosmetic things you can do to change it, fine. But if it's a structural thing, if it gets too in-depth, maybe you should wait and take a look at another house. What do you think?
No, I agree with that. I mean, I think for some of my clients, it's not their first home. So it's, they're thinking down the road 10 years,
right.
Starting the family, doing that. So they're obviously looking for specific things when it comes to that. But, I encourage my clients to find what they want. And it might not be there today, but it could be there tomorrow. And in today's market, things are popping up.
Well,
and
you can make a house yours. I mean, I think
Right.
it's more about the location and the school district and where you want to be. I mean, it doesn't need, you don't have to walk into the perfect house.
Well, yeah, and that's a huge thing, especially when you're starting a family. The school district is big nowadays. And you can turn a 1,600 square foot ranch into a 2,800 square foot colonial if you want to.
Right.
I mean, it's there's opportunities out there. So.
Well, the Midwest has definitely been jamming. I mean, if you look at the national statistics, 6.6% increase since the second quarter. Median home price now in the Midwest, $204,000, but still very affordable with the low interest rates out there. So many opportunities. One of the things that we continuously talk about is the process and expectations of families. So that's something we're going to be talking about this morning. If you're out there and you're thinking about buying a house or refinancing your house with the all-new low interest rates that have really over the last couple of weeks and in the last month or so, be sure to call Capital Mortgage Funding, 1-800-LOW-RATE, the best mortgage banker. That's 1-800-569-7283. We had a tremendous amount of appreciation. And even when Harry sent out the flyer, the email the other day saying, reminder, get in touch with your clients over the last couple of years because of the fact that many of them did go 5 or 10% down and they're seeing so much appreciation lately. Maybe they can get a better interest rate and eliminate the PMI or even just completely get rid of
and
MIP.
wipe out some of that debt too. A lot of people, have ran up credit cards again, even though we say, week in and week out not to do that. But get out of the toxic debt, drop the PMI. I mean, there's lots of opportunity to save money right now.
We say you don't want to use your house as a piggy bank. You can't do that. Don't get on that merry-go-round. The however is that in the last 12 to 18 months, a significant amount of increase in property value has happened. If you bought a house with less than 20% down and you're paying PMI, you've got to go ahead and let us take a look at it, get the removal of that PMI. Also, if you have toxic debt, credit card debt that you've rung some things up for whatever reason, we can help you pay that off, roll it in, and then you have to tear up those credit cards. So these are things that we're helping people try to save money on. And Alex, as you do it every day, and same with you, Harvey, you guys, we try to save people money. We're not going to do a transaction unless it's beneficial for the consumer. All right, you do not need to go into an adjustable rate mortgage. Matter of fact, it could be that adjustable rate mortgages go away. There are people, 10% of people out there that are going to be in a house less than 5 years, might want to take a look at an adjustable rate. But it is a 30-year, 20-year, 15-year, 10-year fixed market out there. It is a fixed rate market.
We got to remember back in the day, 30-year fixed would be at 6.5. You get an ARM at 4.5.
But that's because there was a 2-point swing.
Exactly.
Okay,
So
but now there's not.
It's not.
So
the margin is negligible.
So use round numbers. If a 30-year fix is a 4%, you're not going to have an ARM at 2%.
No.
It's just not going to happen. So anybody out there driving on Woodward right now in a 68 GTO and you've got debt, let's pay it off so you can go ahead and cruise some more.
When
That's
you
what
take
I'm
cash
saying.
out of your house to buy your car.
Let's go. Hey, right now, nothing wrong with a 68 GTO, brother.
I didn't say
I'd
anything
like
about
that.
the car. I talked
Or
about how
69,
it's financed.
or the Judge, or come on, let's go. I'm a car guy.
Those go for like $100,000.
Bro, they're so sweet. It's unbelievable.
I'm serious.
But I'm
Aren't they
not saying
crazy
mortgage your
expensive?
house to buy a car. I would never do that. I'm just saying let's help pay off debt so we can cruise some more.
There you go. Fair enough. I'll take that. Hey, low interest rates. People don't even know. I mean, yeah, historically speaking, interest rates have been great for the last 7-8 years. But a little bit of drop here. We're probably seeing our lowest rates in 2017 right now. And again, getting off the purchase side of things. But if you did purchase in the last 2 years, that's why you take a look at refinancing. And again, whether you get these adjustable rate mortgages in the past, that were really good for a lot of families. They were based on the LIBOR hearing, and I think that the LIBOR's going away. Yeah. So the London Interbank Offered Rate, which was used as the index,
is rumored to be going away.
Is rumored to be going away.
That could throw the adjustable rate market in a state of flux. But what I'm telling everybody out there right now is I wouldn't be concerned with an ARM. Now, a new ARM. Now, you could be concerned with your existing ARM. What's going to happen?
If the LIBOR goes away, you're on an ARM right now.
Yes.
And it adjusts.
There's going to be another monetary instrument that it's going to adjust
But
to.
you signed a note based on the LIBOR.
Okay.
they're going to change
away.
the index.
I understand. They can't arbitrarily modify your note.
I think they're arbitrarily going to modify your note and give you an opportunity to refinance to a fixed rate.
Is they're going to go ahead and say, here is the new instrument that we're going to have to adjust your rate to. Yeah. There's going to be another monetary instrument, Alex. So, like I said, it could be in a state of flux. Nothing to get alarmed at right now.
248-539-9797. You're listening to the Hardcore Mortgage Show, brought to you by Capital Mortgage Funding. We always take your calls here live in the studio at 248-539-9797. Always at Capital Mortgage, 1-800-LOW-RATE, the best mortgage banker. We have a complete staff all weekend long to make sure you get the true approval letter. A lot of things that have popped up over the last couple months. It's the same things that really have popped up over the last couple of years as things not to do when you're applying for a mortgage or if you're thinking about getting a house. We all have to go through what we call job change and maybe the way you get paid at work. But be very careful if you're thinking about making a job change where you're going to become a commissioned employee. That changes how you get approved for a mortgage. And we've seen quite a bit of things like that lately. And also families going out there and putting a lot of cash into their bank account. So we have a couple reminders here this morning. There's always reminders to get in touch with complete mortgage professionals, mortgage bankers that can set you up for successful home ownership and really make the mortgage process smooth and easy. It's all about the documentation, getting it up front, and getting a true approval.
You know how you said it. There are going to be significant changes in employment, in debt structure. If you're transferring money around, if you're getting a gift, if there are going to be any significant changes, you have to tell your mortgage person. This goes anywhere. It's not just us. I mean, if you're working with a bank, another mortgage banker, whatever, and you're going through some issues right now, you've got to disclose that so we can go ahead and make the necessary arrangements. And you don't do anything crazy. Don't buy new furniture. Don't buy a new car. Don't switch jobs. That's what Harvey's talking about. Don't do that in the middle of a mortage transaction.
Right. There's a lot of things you can do to really help yourself.
And don't buy an engagement ring. my brother.
I like that.
My brother.
Do you mean in general?
No, not in general.
Oh, okay.
Just when you're trying to buy a house.
You said my brother. You're back to busting with your brother right now. You said,
yeah, I'm calling him out, but he was doing it all.
All right, when we come back, all these stories and a whole lot more. Keep it here on 97.1 The Ticket. We'll be right back.
Hi, Harry Glanz and Danberg for Capital Mortgage Funding. We do loans everywhere. In Southfield, in Birmingham, in RoyalOak, in Groseal, in Detroit, in Canton, in Northville. No matter where you live, we want to do your mortgage too. That's Capital Mortgage Funding, 1-800-LOW-RATE, the best mortgage banker. Hi, Harry Glanz and Danberg for Capital Mortgage Funding. We do loans everywhere. In Southfield, in Birmingham, in RoyalOak, in Groseal, in Detroit, in Canton, in Northville. No matter where you live, we want to do your mortgage too. That's Capital Mortgage Funding, 1-800-LOW-RATE, the best mortgage banker.
Welcome back to the show, 9/17 if you're just joining us. August 12, 2017. We got a few weeks of summer left, that's for sure. Kids are getting ready to go back to school. Are you out there looking for a house to move them into a new school subdivision, a new school district? Give us a call for sure, 248-539-9797. Get that approval letter here. We were talking about before the show that out in the West Coast, things are even crazier than they are here with the multiple offers and such.
So I happen to be at a national conference, and it's just what we do to bring things back here. And we bring back some perspective, too. And the perspective is that around here, yes, we have multiple offers. Yes, the market is hot. But it's not as crazy as it is in other parts of the country where you have literally houses or pocket listings, and Charles will tell you about that. Bottom line is that you have to be prepared. You have to assemble your team. You have to have your plan in place. So when you're ready to go ahead and make that offer, you need a bona fide pre-approval letter. We're not talking about pre-qualification. We're talking about a pre-approval. We look at your financials, tax returns, check stubs, your assets. We run it through our automated underwriting system. We get an approval. This is a real approval. So when Charlie's out there showing houses, he's got a letter from Capital Mortgage Funding from James in his hand, and it's as good as a cash offer right then and there.
All right, we got so much to share with you. Let's get to these calls, and then Charlie's going to talk a lot about buying homes and lots of good things. Let's go first to, let's try Anthony first, Alex, out in Macomb. Hey, Anthony, welcome to our show.
Hey, guys, how you doing?
I'm good. How are you, sir?
Good. So my question's more about selling. So I recently sold my house, and it's pending. So we had the inspection, everything went fine, but I did make an insurance claim on my house about 3 years ago, and it got brought up on the insurance background when the buyers were shopping around for insurance. So they kind of contacted my realtor and were asking questions about it. And I'm just curious, is that a showstopper for buyers, or is that something that just normally happens?
I didn't even know they could do that.
Well, here's how it works. I had one like this about 6 months ago in St. Clair Shores. What happens is your insurance company is going to do a history before they, the new insurance company, and they're going to find out if you had a leak in the basement that you had a claim on or a roof. So it's important as the seller to disclose everything. Now, in your situation, if they came up with something that you failed to mention or maybe you forgot about it, just disclose it.
Alrighty, welcome back to the show, 9:17 if you're just joining us. Another version of the Hardcore Mortgage Real Estate Business Show brought to you by Capital Mortgage Funding. Hey, we take your calls here live in the studio, 248-539-9797. Really a light show today. We're excited to have your calls, and let's move off to Scott in Wyandotte. Hey, Scott, good morning. Welcome in. Go ahead.
Good morning.
Morning,
What's up,
sir.
Scott?
Morning.
I purchased a house in Wyandotte, a newer house, about 11 years ago for about $275, and obviously in 2009, when the economy went down, I lost all the equity in it. It's finally built itself back up to being worth about what I paid for it. And what I'm wondering is I really want to stay in the house about 5 more years, but I'm not sure. I'm a little worried about the economy taking another drop, and just wondering what your guys' thoughts on that are.
Well, you said on the screen it says you're looking to sell your house while the market is up. Where are you going to go?
Yeah, that's the thing.
Something smaller. My kids are moved out now. Probably go down to something a little bit smaller. Probably staying in the Downriver area.
What do you owe on that house?
About $210.
So $210. So there is some equity in there for you. I mean, if you're gonna downsize, and we got Ryan here, he could tell you about that. But if you're gonna downsize, you could pull some equity out and save some money, and you don't need that big house anymore. Why not?
Kyle, what do you think?
The kids are moved out, and I don't really need the space. I like it though. I'd like to stay here 5 more years until I'm ready to really decide where I want to move. And I'm really the only reason I'm really thinking about selling it is because I'm worried that 5 years from now, the market's going to take another dip, and I'm going to lose a bunch.
I don't think it's a dip.
Yeah,
I think it's going to plateau.
Yeah, I think it will. I don't think that should be your biggest concern. I think if you're committed to downsizing and you do have the equity in your house, you'll make a little money. Put that money into the new house, put it down. It could be a good move now. I mean,
Right.
if you don't need the space and you don't need you can have a concern about the economy. That's your concern, and if that's something you're feeling, I would look into it, because you can probably go get a nice house for maybe below 200 and, keep some of that money maybe too. But yeah, I think if it's something you're thinking about now, you should probably think about doing
Scott, the deal is this, is that there's a saying, the current value of your dollar is worth more than the future value. So any money you get now is worth more than even thinking about what you could get in the future. So if you're asking us to predict what's going to happen in 5 years, I'm going to tell you this. I think the market is at a high. Right now, we're in a 6th year of a 5-year cycle. It's been strong since January of 2012, but I can't tell you what the market's going to be. I mean, houses could continue to go up for another 5 years. But if you're concerned about your current situation and you're happy in your current situation and you're going to make some money on it, there's no time like the present.
Hey, Scott, go out there. And another thing I always suggest families to do, and I like where you're at with this because you really can't make a bad play either way, but go out and find what you're looking for and then see if there's something that would really work for your needs. Is there a $150,000 to $200,000 house, downsizing in the areas that you want to live in? If so, I like that idea that you maybe even move forward with it. If you get your house on the market and you don't get any offers, then at least you know what you're dealing with. And like Harry said, maybe your dollar's worth a little bit more in today's marketplace. It's a great call. Look to hopefully get you approved for a mortgage and wish you the best of luck. Thanks a lot, Scott.
Good luck, Scott.
All right, thank you.
Thanks, man.
All right. I actually talked to you before the show started, Kyle, and I said, just the cost of living, even in this gentleman's situation, it's a bigger house maybe. The bills are a little bit more. But you mentioned something to me because you have younger kids and we were talking as we were grabbing a drink. Your daycare.
You guys had drinks without me?
Just like ice water at the cooler over here. Okay. But there's no doubt, even the daycare costs you more than your mortgage payment right now.
Yeah, no, that is something that as you start a family. I don't even know if I even thought about it like that. And obviously, that's not what you think about when you're starting a family. But it's real. It's there. And I have a 3-year-old and a 1-year-old, and the daycare has been great, but it also costs. And when you're getting into looking at buying a home or selling your house and getting a new home, you got to take into consideration these things. And even then, it's, who knows what's going to happen with your children when they're 5. Beverly Hills.
Okay.
That's
so
14
South Birmingham schools?
Yeah, Birmingham schools.
So you're in a great spot, man.
Oh, yeah.
He's not going anywhere.
I'm not going anywhere. No, I when I started in real estate, my wife would send me houses, and I said, we're not moving. I'll stay here on the lawn.
Well, you made a great
spot.
Location's very important, obviously, and you picked a great one.
Yeah, no, it's perfect.
Families and millennials and first-time home buyers, they're worried about, this fast-moving market right now. And, is it going to keep going up? Is it going to price them out? Affordability is an issue across the United States right now. And if you can find something that's affordable and you can set your life up, the right lifestyle, there you go. And again, like you mentioned, schools become probably the number one thing with younger families in there. The right schools can save you a lot of money. Then you don't have to send your kids to private school.
Right.
So there's a lot of ways to budget around them. We talk about budgeting. So often we hear, how are you going to get into these houses without saving money? So
here's how millennials are saving money, Harvey?
You tell me?
An article they came out. It's 37% have moved back into their house with their parents, right? And then another 15% expect to move back into their parents. So that would be 52% of all millennials are looking to save money, and they do want to buy a house. I don't know. There was that rumor, that myth out there that said millennials didn't want to own their own home.
That's not true.
Who doesn't want to own their own home? But what they're doing, because there's student debt and you have to save money, they're moving back in with their parents for a short period of time. They're going ahead, and Derek, you could probably speak to this better than I can.
Absolutely.
They're saving a lot of money, and then they're putting money down, and that's really your strike zone. Those are the people that you're working with on a daily basis.
All the time, yeah. I think that's a very good point that you brought up. I made that move personally myself at one point. It's hard when you're not really educated as to exactly what it takes to purchase a home. And that's, just getting yourself educated, getting yourself in the right mind frame to say, all right, how much do I really have to put down? How much do I have to save? I got to move back in with my parents because I'm never going to have 20% to put down. And people out there, they don't know, especially the younger people, the millennials, they don't know that you don't have to have 20% to put down to get into a home. And that's something that I help people with every day. I need people to paint the full picture for me, and then I can present to them exactly what it takes so you maybe don't have to move in with your parents. But a lot of people are doing that.
But I will tell you this, that as a parent of millennials, I don't mind when my kids come back home.
It's always nice to go back home.
You love it,
and by the way, I'm going to let the cat out of the bag. We like it when our kids come home, but only for a certain period of time.
Yeah, okay.
All right, that's it. We only like it for a certain period of time, but that's what's going on right now. There's, there's job growth, but the wages haven't caught up with the price increases of the properties that are going on right now. So you've got to move back home a little bit, save that money, and then put it down on the house that you're going to buy.
Even if you put a plan together, like a 6-month plan, just set the money aside. It's a great way to go. I mean, I did it. I mean, that was in 2001, I think. When I graduated, I lived in Julian Paul for a while and saved up some money and bought a house.
And now look at you, all grown up now.
All grown up. Speaking of all grown up.
The reminder is, of course, FHA loans at 3.5%.
Wait, the comma, not a period.
The FHA loans at 3.5% down. Still a great program. Allowable credit scores as low as 600. Like to see them a little bit higher for you folks. We'll give you all those answers on how to get your credit score up at Capital Mortgage Funding. But again, don't let a low credit score or your situation get you down. Give us a call, 1-800-LOW-RATE, the best mortgage banker. We'll put the plan together for you. Get your credit score up. And again, it only has to be typically 600. And then, of course, with FHA, you're allowed seller's concessions. It's just not the down payment, as we all know. Of course, USDA loans, 0 down, VA loans, 0 down, 3% down conventional loans, all these great opportunities out there. But there's other costs when you purchase a house. There's moving costs involved. Not just the down payment, the closing costs, the tax prorations, the homeowner's insurance, title insurance, recording fee. We can go on and on.
Utilities, cable.
Jump in.
How about cutting your lawn, landscaping, anything that goes wrong?
Everything.
Furnace blows out, hot water tank blows out.
Setting up the utilities, potentially buying some furniture and furnishings for the house. There are lots of things you need to do, including that's why the plan is so important, because you need to even be able to save as you're a homeowner for future repairs.
Yeah, Ryan brought up an interesting stat. He talked about the 90 homes that have sold in
Kyle.
I'm sorry, Kyle.
You're calling his brother. It's okay.
Okay. I know his brother. I like his brother. But anyway, so he brought up the point where the Woodward corridor, specifically Royal Oak, is very, very hot. So everybody driving on Woodward right now, all the way Ferndale through Royal Oak, Huntington Woods, Berkeley, all right, Beverly Hills, Birmingham, Bloomfield Hills. You couldn't have a hotter part of our county here in Oakland County. Macomb County, though, has been the shining star because the last 6 years, the property values have increased dramatically in Macomb County.
All right, that music says we're up against a quick break. You got to keep it here on 97.1 The Ticket. We got tons to share with you. If you're buying or selling a house, keep it right here. We'll be right back.
97.1 The Ticket.
Hi, Harry Glanz and Danberg for Capital Mortgage Funding. We do loans everywhere. In Southfield, in Birmingham, in Royal Oak, in Groseal, in Detroit, in Canton, in Northville. No matter where you live, we want to do your mortgage too. That's Capital Mortgage Funding, 1-800-LOW-RATE, the best mortgage banker.
Welcome back to the show, 9:33 if you're just joining us. It's going to be a pretty day out there, or if not, definitely tomorrow will be. So get out there and enjoy. We are brought to you by Capital Mortgage Funding. Call us all day long, all weekend long. Ronnie J, Mike Velasa, the entire staff's there. They're all texting me. Get that real approval letter. That's right. We actually take your documents, run it through, do a full application. You're approved within 24 hours. Go out there and buy with confidence. That's the key. If you're working with a real estate agent, they're going to want to know that approval letter's in hand. Sure enough, yesterday I got the call on a great referral. We've got to fix someone's credit. And she's already gone out there. I said, how many times have you gone out and look at homes? And she said quite a few times. So sometimes you just got to put your ducks in a row first. And again, get that true approval letter and then buy with confidence.
Hey, Harvey, I know Alex is going to find this hard to believe. I got an email. I was on the plane on the way home.
Yes.
That I have a buyer right now. 13 offers on one house, and he didn't get it.
Wow.
Charlie, what do you think? 13 offers?
It's an emotional roller coaster. You know, the buyers, when we meet them, we always tell them right in the beginning, we try to give them a plan of action, but at the same time, we let them know that there's some disappointments that they may run into. So don't worry, everything. We believe that God's got everything in his hands. It's going to work out. But if we work hard and we're diligent, good things will happen.
Yeah, I like that angle for sure.
So you're that guy that you tell your clients, you disclose everything up front. So here's the magic question. You ready? They buy a house. They put an offer in. Let's just say it's for $200,000. We know the market's hot. The appraisal comes back in at $190,000. What do you tell your buyer?
Well, it's up to the buyer. If the buyer wants to invest more money on a particular property that doesn't appraise, then that's up to them. And in most cases, they do. If they
is 97.1 The Ticket.
Starting pitching again, a big problem for the Tigers as they fall to the L.A. Dodgers last night, 8-5 at Comerica Park. The Dodgers now 52 games above 500. Tigers lose despite getting 2 home runs from Justin Upton, who just keeps hitting, and Victor Martinez also goes deep for his 10th. But Jordan Zimmerman allowing 7 runs in 10 hits and 5 in the third innings. Michael Fulmer today, 4:10 the first pitch, right here on 97.1 The Ticket. Then just after the Tiger game about ends, the Lions game will begin. It's preseason game number 2 at Ford Field. For the Lions, they host the Jets tonight at 7:30. Indy Colts center Ryan Kelly will have surgery on his foot. He's out indefinitely. He injured that in a joint practice with the Lions last week. At the Wyndham Championship on the PGA Tour, Ryan Armour shoots a career-best 961 on Friday for sure to leave with Webb Simpson after 2 rounds. At the Ticket Update Desk, I'm Jeff Lesson. For more, 97.1theticket.com.
The basketball team that Detroiters love most. The Detroit Pistons live here.
97.1 The Ticket.
Alrighty, plenty to share with you here. If you're listening to the Hardcore Mortgage Real Estate Business Show, brought to you by Capital Mortgage Funding, 1-800-LOW-RATE, the best mortgage banker. In our 17th year, of course, we are now doing Facebook Live, so tune us in here. If you got Facebook, definitely check out our show live. We answer all your questions on mortgages and real estate. We got a whole bunch of things to go over, and I want to throw this out there real quick. Actually, they extended this past week. The HARP loans, believe it or not, were extended. They were due to expire September 30th of 2017. Now, I got to tell you, there's not many families out there that haven't taken advantage of the HARP loans.
Why have you not done that yet?
But there are a few out there. And again, there's so many people out there that don't take advantage of refinancing. If you've been paying on a 30-year mortgage, you're already 7 or so years into it, very likely you could remove the mortgage insurance, knock your term down, knock years off your mortgage, and get a great interest rate. So lots of opportunities out there. But the HARP loans have been extended again now through December 31st of 2018. Again, it really works. That program works more so for families that have first and second mortgages and that are underwater. So it's not for everybody, but we can give Capital Mortgage a call. We'll definitely qualify you.
You got to remember, too, man, the first and second mortgages, if both loans were used to acquire the property and you haven't refinanced them yet, it's not considered a cash-out transaction.
Right,
so you can go to 97% loan-to-value and get that second out of the way.
Yeah, but conversely, like you're saying, if you took it out after you bought the house,
Correct.
then it's a cash-out transaction.
That is
you can't
correct.
do it that way.
We have a lot to share with you here, but something, a subject that always comes up on the Hardcore Mortgage Show is the for sale by owners. You know, the families out there are families out there that can get it done, have done it over the years. Lawyers, people that are a little bit more involved with the paperwork. It's not impossible, but yet it can really cost you a lot of money. We talked about it a little bit before the show too, Kyle. There's some interesting things out there and angles about it. Give me your opinion on, you know, if you're out there and you're in a good market, why not to sell for sale by owner?
Well, I think, like you said, Harvey, I think that if you have some experience doing it, okay, but I think people, they just get so stuck on that 6% to sell your house. So that's all they're thinking about. And sometimes when you are in that mindset, you're going to and you don't really know what you're doing in terms of the transaction, there's going to be mistakes made. You might not price it right. I mean, I know everyone can look on Zillow and, this is the price for my house. I think it's when you have a real estate expert like myself, let's say, and I come in and show you the value of your home, and this is what we're going to get for, this is what we're going to list it for, and I'm going to be there to cover you. This is what I do. This is why I'm here. You don't have to worry about anything. I will take it all on myself. You're my client now. You're my family. I'm going to treat you as is, and I'm going to get this done for you. When you're doing it yourself, what if you have to deal with an agent on the other end and you don't have the experience? And then you start listening to them, and all of a sudden you're not looking out for yourself. You just want to get it sold, and things fall through the cracks. And, I just had an experience with a buyer who put an offer in for sale by owner, and it did not go well. It was.
You gave us some details.
Yeah,
on it.
Let's just say the inspection came back and it was not good. Let's just say there was duct tape on the water heater.
Why is that your fault? Wasn't there some name calling?
Oh yeah. Oh, there was a lot of name calling. Yeah. So it was my fault because he wasn't willing to fix anything in the house or replace or give a credit.
Okay, I'm not willing to buy it then.
Yeah. So and then we moved on.
Hey, listen, there's a reason why approximately 90% of the homes sold across the country are sold with realtors.
Right.
All right. So if I'm giving odds, all right, and I say something is 90-10, I'm going with the 90% side.
Every time.
All right, so if you break it down that, everybody's concerned about saving that 6%, and I believe, you've heard me say it, stay in your own lane. If you're going to sell a house, why not hire a professional to sell your house? That's not what you do for a living. You could end up costing yourself more money.
You really? Oh, Harry, that's the biggest thing right there.
Right.
I mean, if you think you're doing it because you're going to save money on the back end, most likely not, you're going to lose money because you're just not. That's not what you do.
As you told me the story, it reminded me of a couple things I ran across this weekend, and again, or this past week, and it could be from even real estate agents that supposedly know what they're doing.
Right.
Is if they're not setting up the proper expectations. We talked with all the professionals. We had Charlie Lutz in last week. All these great agents that we've had on the show and that we work with so often. They talk about smoothing out the road. Their buyers and sellers don't have to have those emotional roller coasters because they smooth it all out.
Right.
And when you lose those parties, when you lose a qualified selling agent or listing agent, all things go haywire. I mean, it's just nuts, and people's emotions get carried away because there's no one there to rein them back in.
That's it too. I mean, selling a house is an emotional thing. You have attachment to it, and as a real estate, I understand that, and that's like you said. I want to make it smooth for you, as smooth as possible. And when you don't have that person to lean on, you're kind of running around like a chicken with his head cut off. And for this person who's selling his own house, it became my fault. It was a blame game, which. Doesn't get you anywhere.
I think there's a safety issue too regarding screening the buyers. Any random person can, if it's a for sale by owner, they could knock on your door and say, "I want to see your house."
Yeah, strangers. There's protocol. There's protocol to go through. Yeah. There's a safety factor. I mean, I recommend it highly. Again, statistics are on your side, all the realtors' side, that 90% of the homes are sold in America are sold through a professional real estate agent. Right. I like that stat, and also, there's one common denominator with all good service clientele relationships is that if you're representing, if you put your house on the market and you're the listing agent, whatever heat comes with that, it goes right to the realtor.
Right.
It's not on with the seller. So what I would do is I would tell you, and I'm sure every great real estate agent will tell you, they'll take the heat.
Yep.
Just bring all
everything.
Yeah. And we say that in our industry too. Yeah. We'll take the heat on our side too. Yeah. Just give it to us.
I paid the stress for you. That's what I do. I will handle it.
Right. Yep. So why not do it that way? Save yourself as a consumer. You want to have as little stress as possible in your life. And when you hire a professional in any walk of life, in any profession, you're taking the heat off of you and you're putting it on somebody else. And that's what they get paid for. And I think it's well worth it. I really do.
All right, 248-539-9797. We take all your calls here up till 10 o'clock. And then we got Pat Caputo coming in with sports. Again, another shout-out to all our friends. I think Pat's going to be broadcasting live out there at the DreamCruise. Okay, so we're going to be broadcasting out on Woodward all day today. And keep it here on 97.1 The Tickets with baseball coming up here, the pregame about 3:30 or so with Dan and Jim. So it's going to be awesome. Let's move out to Jerry here in Westland. Good morning, Jerry. Welcome to our show. Go ahead, sir.
Morning. How are you guys?
Good morning, Jerry.
Hey, so my question is kind of unique in that I finalized my divorce in January. And in the divorce, it said I had to be refinanced and remit half of the payment to her in 6 months or I had to sell the house. I was set up with a mortgage company that was going to do it. And then when we were trying to figure out whose name was on the deed, I said, I'm not positive, but it does say in the divorce decree that it has to be refinanced, so that should be good enough to say I have to do it. So I sent them that. They saw the verbiage that said 6 months or sell, and now they won't refinance me because they're afraid that they'd be breaking the court.
That's a really stupid lender.
Okay, here, scratch that. Number one,
because really all the liability is on me, not them. And my wife we're amicable right now.
Yeah, she wants to remove her name from it,
and that's it. And
right, and I'm staying in the house.
What's the balance on the mortgage, Jerry? How much do you own the house right now?
Right around $39,000.
39,000?
39, yeah. And I want to do a cash-out refinance because I wanted to pay off my father-in-law. We have a loan to him.
Yeah.
And then I had to take out some money from my dad to pay for the divorce. So
you can go to 80% of the appraised value. It's an easy transaction, and whatever lender said they're not going to refinance it because of the verbiage in the divorce decree.
Jerry, I'm going to be calling you after the show. You're my new client. Thank you very much. I need a new client in Westland.
Yeah, we're pretty fluent in that. Although we're not attorneys, we don't play them on the radio. We know how to do that.
Yep. No, and that's why I wasn't sure if you guys would take a call.
No, we could.
A legal question.
No, but it's really not. See, what happened is when you and your wife were going through the divorce, you put certain things in writing, and then you have a judgment that says that you need to do this by these dates. Now, if the dates run over, it's not a big deal. The intent is for you to live up to that agreement as long as your wife's not giving you a problem. She knows she's going to get the money, get off of there. Then it's fine. They're really nobody's running back to court and saying, "Hey, Jerry didn't do this by this date."
Right. They might in a couple years. They could in a couple years, maybe.
And they tried telling me that I had to go back and get an amendment.
No, boy.
Not even a legal issue.
Jerry, it makes sense that you would make this call. Yeah. It would make sense that you make this call this week. I've heard some crazy stuff this week.
Right. Yeah,
Jerry, I'll call for the show, but I would have taken care of for you, man.
Right, we'll take care of that.
Thanks a lot, guys.
Thanks, man.
Thanks a lot. All right, if you have a situation like that, definitely call on the show. 248-539-9797. We got tons to share with you. Keep it right here.
97.1 The Ticket.
Hi, Harry Glanz and Danberg for Capital Mortgage Funding. We do loans everywhere. In Southfield, in Birmingham, in Royal Oak, in Groseal, in Detroit, in Canton, in Northville. No matter where you live, we want to do your mortgage too. That's Capital Mortgage Funding, 1-800-LOW-RATE, the best mortgage banker.
Good morning. If you're just joining us, we got a jam-packed show in about another 16 or so minutes. But you can always find us at Capital Mortgage Funding, 1-800-LOW-RATE.
What is that music?
The best mortgage. That's great
what
stuff.
What was that?
That's good stuff.
That was Rage Against the Machine.
Yeah.
Sweet. All right. Rage Against the Machine. I like that.
I know who that is.
Who's that, bro?
It's great stuff.
Really?
Great stuff.
Cool.
Anyways,
You know who that is.
248-539-9797. Having some fun here this morning. Again, we brought Charlie Lutz in from the RE/MAX office. And he said, Charlie, which office is that?
Well, it's nice that you say that. We've got 6
multiple
offices. Yeah, we have. What makes it really nice for us is that we can pretty much take care of our clients wherever they live in the Macomb Township area. We have one in Chesterfield, there's one in Shelby, St. Clair Shores, Clinton Township, Warren, and we have a new office over in Royal Oak. So yeah, we can pretty much take care of everybody no matter what area you're in. And we just listed a nice one too that a lot of times the people are really interested in the 3-car garages.
Yeah.
Well, we have one over in Chesterfield. We just put on the market for $294. It was a builder's model built in 2000. And it's beautiful. I mean, it has the pan ceilings, recessed lights, granite. It's an unbelievable house. We just listed. And we put that one on the market for $294. So if you're looking for a 3-car garage in a beautiful spot, it's over by 21 in Sugar Bush. That's one there that you'd want to really take advantage of quick before someone grabs that one.
Yeah, that sounds really great. Great opportunity out there. Again, sometimes if you can find a builder's model, they put all the whistles and bells in there. And
everything's
it's really
in
gorgeous.
it. It's got all the bells and whistles.
All right, let's move off to some calls. And if you want to join us, 248-539-9797. Always on Facebook Live. Check us out. And again, like the Hardcore Mortgage Show, we appreciate it. Again, you'll find tons of information. We've been sending tons of information out there, and hopefully it'll help you purchase a new house or even sell yours. Let's move off to, let's try Mark first, and then we'll get to Eric. Good morning, Mark. Welcome to our show.
Good morning, guys.
What's up?
Morning.
My wife and I are looking at a place. It's listed as a lot right now, but there's an existing home on it. We just did a walkthrough with a realtor last week, and the home isn't in terrible condition, but it's my understanding the seller doesn't want to deal with the existing home. He wants to just sell it as a lot.
It's not
But
his choice.
If we were to come, what's that?
It's not really his choice.
Yeah, it's not his choice.
It's your choice because we need an appraisal on it.
Gotcha. So if we were to we'd have to come to the table with the money to bring it up to code for a mortgage to be written on the existing home, or how does that work?
Maybe.
It depends how bad it is, Mark. I mean, if the home's really a mess, yeah, there's gonna be stuff that might get called out.
Yeah. What's your intent? What's your intent to do with the home? Are you going to rehab it? Are you going to knock it down? I mean, what do you want to do?
We want to rehab it because we walked through. I mean, you could live in it. Now the basement's a little bad, and structurally we want to make sure the basement's not going to, fall off. But it seems like we could put maybe $10,000 to get it in up to code or something like that, and then
it'll be more. It'll be more.
You sound like a candidate for an FHA 203K or maybe even our conventional product. Alex, you want to jump in on that?
He's gonna flip it, right? That's your goal, Mark?
No, actually, we got a young family, and it's in a nice area.
He wants to live there.
I thought it was going to be a flip.
Nope.
Mark, I've got a great product for it. I mean, there's a 203K, which is an FHA product, and we've got a conventional product as well, where you can actually get the money to rehab the house.
Yeah. Now, you're not doing it yourself, though. You are hiring professional contractors where they, put their bids in, and it's accepted, insured, licensed contractors. Welcome back, 946. What a day outside, man. It's definitely summer. Hey, I don't care if the kids are going back to school. We got at least another month of this gorgeous weather. Get out there and enjoy. If you haven't gotten your approval letter, be sure to call Capital Mortgage Funding. 1-800-LOW-RATE, the best mortgage banker. Get a real approval letter. We run your file through the automated system first. Then we even take it further if there's any questions at all. Verify your funds. That way you're ready to close within 30 days. And trust me, all the great real estate agents out there want to know that you've got a real approval from Capital Mortgage Funding. We close transactions. That's the key. Hey, let's move on to some calls here. And if you want to join the show, 248-539-9797. Charles in Commerce. Go ahead, sir, and thanks for calling.
Hey, how you doing?
Good morning, sir.
Morning.
Okay. I want to tell you, I tried this already twice, and I don't know why. You guys could tell me if I should try again, but I have a house right now worth probably about $550. I put an addition on. I tried to get a refi before. And because I didn't have enough equity in the house, I wasn't able to refi both my first and second mortgage.
Okay.
But they let me do my first mortgage.
And they subordinated the second.
Right.
Okay.
So, I still have the second one that I've been paying on.
What's the balance on the first and second, buddy?
Together, it's $230.
Okay. And the house worth $500 or $550?
$550.
Okay. Good. I like it so far.
Okay.
Did they say why they wouldn't do it?
Annual income, I have me and my partner. He is roughly around $500,000 a year. I'm around $200,000 a year.
What's the rest of the story? There's something else going on, Charles.
The second.
Great equity, great income.
There's a reason.
Well, I got a great CPA, I think, is my problem.
Well, are you guys W-2'd?
I have also, what I do, I am I own properties. I have 19 rental properties, and my income is coming from that.
Okay, so but they write off all the income then. So you're not showing the income coming through?
Pretty much.
What about your partner? He makes $500,000. Is he on the title?
He is also.
He's rental properties also, or he's W-2'd?
He's actually S corp.
So he's an S corp. So I wanted to, there's going to be an income issue what you're showing right there. So I would like to see your 1040s and see what the actual bottom line is, your adjusted gross income, because it sounds like there might be a lack of income there.
Yeah, they're saying that was it the percentage?
Your debt to income ratio is not good.
Charles, let me ask you a question, man. How did you get the mortgage initially, though?
It was through.
Was it a long time ago, like stated income or something? You just say.
Yeah, it was 2 years ago when they had that program going out.
Yeah, dude. There's some options here, man. Let me give you a call after the show. I want to take a look at at your tax returns and see what I can do for you. But it sounds like there's a couple options there.
Oh, awesome! I appreciate that.
Give me like 20 minutes and I'll call you right back.
Thanks, Charles.
Thank you.
Cool. Thanks, man.
All right. It's as simple as that. Again, let us take a look again. Did you have an issue last year, the year before? Maybe things changed. Maybe we can review your income a little bit differently, adding in some depreciation, different things that we might be able to do. There's always more to the story. So let's check it out for you and see if we can save you money. Let's move on. 248-539-9797. Mike's calling in from a cell phone. Good morning, Mike. Go ahead.
Hey, how's it going?
Good. What's up, man? Mike?
My situation is a little unique. We have a couple rental properties, one in Bloomfield and one in Ferndale. Both of them are renovated nice. They're upgrades as far as rental goes. I also have a house in Bloomfield where I live, and with the values of Ferndale going through the roof, I'm just torn whether I should sell off the one or two, or even all three of my properties and move to something that I'm looking, a nicer home, or do I just continue to get the rental income?
All right, so we had this question. Yeah, we had this question last week too, and it all depends on your specific situation. I mean, I don't know how much you're netting off of your existing properties, but if you think it's worth it to keep them, fine. If you think you just want to get rid of them and move on to something else, it all depends on your situation. I mean, what's the cash flow that you're getting on all three properties on a monthly basis?
Well, there's two rentals, but roughly right now they're $300 or $400 positive a month.
Each total, one, right? One. Total or each one?
The one is the $400. The other one is $100 and change.
Mike, I'd tell you to look into selling them.
That's no money, Mike.
If you have Ferndale in a Bloomfield properties, those areas are selling. They're selling high. There's good value there. You're going to get good value. And knowing what you're making off these, I wouldn't think twice about it.
What are you netting off?
Yeah, Mike, how could you only net on the Ferndale?
Total.
Like, what did you buy I'm just curious. What did you buy the Ferndale unit for?
Well, the thing is, the situation is, like I said, it's a little different. I don't want to go into too much detail, but it's, we're basically going to own the house free and clear soon, coming off of a payment plan, a consolidation, right? So we'll own that one free.
What do you mean consolidation?
Then it's going to be a $2,000 a month.
Oh, okay. Well, that's a big significant change. That's a big change. So look, that cash flow is really good. We don't know enough about it. Like you said, we'll definitely have to give you a call off the air and find out if we could give you proper advice. There's no doubt there's a shortage of inventory, and those Ferndale homes are selling in a day.
Yeah.
Take a look to see what you would sell. Yeah, I mean, if you could sell it and make, I don't know, $50,000 and then versus $2,000, if I could get $2,000 a month, that's $24,000 a year. I'm thinking I like that.
Right. Well, right. He's going to make that up in 2 years.
That. I like the cash flow on that.
Right.
And that's where it's like, I'm in a good situation either way. That's just like, it's a 2,000 square foot house. It's remodeled.
Right.
So it's a nice house. It's the upper end. It's good cash flow, yes, but it's also, if someone's going to pay me $300,000 for it, then it's tough to pass up.
Yeah,
sounds like it'd be popular on the market. Then.
Yeah, I had a client in a similar situation, and it was, do you still want to be a landlord? One, and two, if you can make, the top dollar right now, and I advised him to sell, and he did, and he made about $80,000, and he's enjoying life.
I'd take the $300,000.
Yeah, I would too.
Over $2,000 a month? Yes.
Oh, yeah.
Over the course of what you guys just said made sense, right? Money now is...
Absolutely.
Yeah, current value of your money is worth more than the future. That's right.
Yeah, and if you still want to do, the investment properties and rent them out, if you sell the one in Ferndale and make that money, you could, look into buying another place. But
right,
you have a lot of options.
A lot of options.
Yeah, a lot of options
hot right now.
Yeah,
Mike, we'll call after the show and kind of kick it around, see what we can do for you.
Good job, Mike. At least
Thanks,
you got
Mike.
a couple rentals.
Thanks,
a lot of families took advantage of that as markets dropped over from 2007 truly to 2000 and I'd say about 11 or 12 is when you could buy up all these properties at the right price. Were you a rocket scientist? Look, whatever made you get to the point where you said, look, you're going to take some of your assets and buy some rental properties.
Right.
Congratulations and good for you, because so many families, if you look at history, haven't done that well. But yes, in the last 5 to 10 years, you've done quite well on rental properties. I like the cash flow. I also like big chunks of money. So either way, you're going to be in pretty good shape. I threw this out there real quick. The cost of money and really what's going on out there. One thing we want to point out all the time is, because you do have equity, $10,000, if you were able to pull $10,000 out of your house on a 30-year mortgage, it's about $50 a month. Again, I'm not going to get specific with an interest rate, but $20,000 adds $100 a month payment on a 30-year mortgage.
Right.
And $20,000, you can pay off a lot of credit cards. So when I was breaking down numbers last night, I wanted to urge families out there, boy, if you think you got some equity and you have all this toxic debt out there, this is something you really should get done, is to consolidate your debt. Again, you can keep your credit cards open. Years past, they made us shut down the credit card. You had to close it.
You got to stop using them, though. You got to stop using them.
But you have to stop using them, Harvey, else you'll get in the same situation. So what you're saying is, would you trade a $100 payment for $20,000 to go ahead and pay off a $300 monthly payment?
Right.
So you're saving $200 a month. The short answer, it's not even close.
It's not even close. And it's usually a lot more than that.
Right. Yes.
Kyle Desmond, and the clock went really quick today. I can't believe it's already the end of the show. But thanks for joining us. Kyle Desmond from Hall Hunter there in downtown Birmingham.
He was good today.
We're going to have
thanks
you
for having me,
again,
guys.
Kyle.
Thanks. I look forward to it.
Easy going. So get in touch with us at Capital Mortgage Funding. We'll set you up with all the great real estate agents, and we'll get you that true approval that you need. Also want to thank Derek Brooks for coming in from our office. We'll get you back on here, Derek. And for Alex Nefouse, Harry Glanz, I'm Harvey Freed. We will see you next Saturday. Keep it here on 97.1 The Ticket.
97.1 The Ticket.
Hi, Harry Glanz and Danberg for Capital Mortgage Funding. We do loans everywhere. In Southfield, in Birmingham, in RoyalOak, in Groseal, in Detroit, in Canton, in Northville. No matter where you live, we want to do your mortgage too. That's Capital Mortgage Funding, 1-800-LOW-RATE, the best mortgage banker.